Navigating the Canadian tax system after 65 can feel, well, a little complicated, right? But what if I told you it's also the key to unlocking some pretty significant financial benefits? That's what we're going to do right now. We're going to break it all down and make it super simple and clear.
So, you're turning 65, or hey, maybe you're already there. It's a huge milestone, and it definitely brings some changes to your whole financial picture. So, okay, let's dive into this thing and make sense of your taxes and benefits together.
You know, if you take away just one single thing today, please let it be this. Filing your taxes is not just some chore you have to do. It is your personal gateway to getting payments that you are entitled to. So many people miss out just because they don't file. We're going to make sure that doesn't happen to you.
Okay, first things first, let's get a really clear picture of the money that's coming in. Because really understanding your income sources, that's the foundation for managing your taxes like a pro.
For most of us, income and retirement flows from a few key streams. You've got government programs like Old Age Security and the Canada Pension Plan. You might have pensions from a former employer, and of course, any money you're taking from your personal RSSPs. The most important thing to remember, all of these are considered taxable income.
Let's take a closer look at Old Age Security, or OAS. It's a monthly payment, but here's the key detail. The government looks at your total income. And if you earn above a certain amount for 2024, that's just over $90,000, you'll actually have to pay some of that OAS back. It's a really important number to keep on your radar when you're planning your finances.
Now, unlike OAS, your CPP is all based on what you put in during your working years, and you've got some flexibility here. You can start taking it as early as 60 for a smaller amount, or you can actually delay it all the way to 70 for a larger one. And just to give you an idea, the average new pension at age 65 was around $815 a month in July 2024.
All right, listen up because this one is a big one. A hard deadline you absolutely need to know. The year you turn 71, your RRSP, well, as you know it, it has to come to an end. You can't contribute anymore, and you have to decide what to do with all the money inside. So, what are your choices? Well, you could just take all the money out at once, but that can lead to a massive tax bill. Or you can transfer it to something called an RIF. You can think of that as turning your savings pot into your own personal paycheck. Or third, you can buy an annuity, which is kind of like an insurance product that gives you a guaranteed income. Each path has totally different tax implications.
And here's the essential difference, because it's huge. Cashing out means you pay income tax on the entire amount in a single year. That could be an enormous bill. With a RIF, on the other hand, your money stays invested and it grows tax-free. You only pay tax on the smaller amounts you withdraw each year. Honestly, for most people, the RIF is by far the smarter path.
Okay, we've covered the money coming in. Now for the exciting part, using your tax return to get money coming back to you. Remember, filing your taxes is the key that unlocks a whole range of benefits and credits.
Here's just a quick snapshot of some of the key payments. You've got the GST/HST credit that helps with sales tax, the carbon rebate helps offset fuel costs, and the workers' benefit can top up income for those of you who are still working. And the best part? No extra forms to fill out. The simple act of filing your taxes is your application for all of these. It's that easy. To make this real, let's look at the GST/HST credit. For a married or common law couple with a modest income, this could mean up to $680 a year, completely tax-free. That's real money that can help with everyday expenses.
And for the many grandparents out there who are raising their grandchildren, this is so important. The Canada Child Benefit could provide up to $7,787 a year for one child under 6. And again, eligibility is all determined automatically by your tax return.
So beyond just receiving payments, filing your taxes lets you actively reduce the amount of tax you owe. Think of this part as your toolkit for keeping more of your own money, right where it belongs.
This is honestly one of the most powerful tax-saving strategies for couples. It's amazing. If one partner has a higher pension income, you can literally shift up to half of it over to the lower income partner. This can lead to huge tax savings by dropping the higher earner into a lower tax bracket.
The key here, though, is knowing which income actually qualifies. You can split money from a workplace pension or from an RIF. However, and this is a big one that catches a lot of people by surprise, you cannot split your government OAS or CPP payments. That is a really important distinction.
And there are even more credits to be aware of.
The age amount is pretty much an automatic one for most seniors. But pay special attention to the disability tax credit, the DTC. It's a significant credit, and just as importantly, qualifying for it can unlock eligibility for a whole bunch of other valuable federal programs. There are also specific credits if you're caring for a loved one or making your home safer and more accessible.
We've covered the why, now let's talk about the how. Getting your taxes filed really doesn't have to be a chore, and there are more ways to do it now than ever before.
Let's just circle back to our main message one more time. To make sure your benefit payments aren't interrupted and to avoid any penalties, you need to file on time. So go mark April 30th in your calendar. It's the most important tax date of the year.
And you've got options. Filing online is definitely the fastest. Free tax clinics are a fantastic resource if you have a pretty simple situation. Some people might even get an invitation to file right over the phone, which is amazing. And of course, the traditional paper and mail method is still there, if that's what you prefer.
The CRA's digital tools can make life so much easier. My Account is your personal tax hub, online 24/7. Autofill saves you a ton of time and helps prevent errors. And setting up direct deposit, it just means you get your refund and benefit payments way faster. I highly recommend setting these up.
Finally, a quick but very important topic. As you're managing your finances, it's absolutely vital to know how to protect yourself from scammers who might try to pretend they're from the CRA.
This simple 3-step process is your best defense. If you get a suspicious call or an email, just pause. Don't react to the pressure. Then, verify the claim yourself by logging into your secure CRA account. And if you're still not sure, confirm it by calling the CRA on their official public phone number. Never, ever use a number the potential scammer gives you.
Wow, okay, we've covered a lot of ground, from income and benefits to tax credits and security. So as we wrap up, I'm just going to leave you with this question to think about. Based on everything you've just learned, what's one simple action you're going to take to make the most of your tax situation this year?